Now, the South African resource industry will hold its breath as June approaches, when the industry begins wage settlement negotiations. After the trauma induced by wage-related strikes last year, investors will be hoping business and labour can come together to find a non-violent solution to wage increases. Stanlib Resources analyst Cobus Nel joins us in studio to discuss the possible scenario. So what's best case scenario from here?
Look, I guess it's, things sort of settle down. Certainly on the platinum side, in the Western Limb, we've seen the AMCU has taken the majority support there. And now there is a arm wrestling going on in terms of, whether there's any room for majority unions at the table, the likes the NUM, etc., etc. And I guess the best potential outcome here, I would argue, is if one can work towards a situation where you've got a wider set of inclusion, i.e. where you can have AMCU that's got majority support, but you can also have the NUM at a table as well as some of the smaller unions. I think in the past it's been, one area maybe that's been criticised, or the unions have been criticised of, is is taking decisions that was premised around self-interest, maybe in some of the leaders or leadership or so on, and some of the decisions maybe not taking truly in the best interest of the underlying employees. And
worst case scenario, we've got to go to that as well?
Look, I mean, I guess it's if, the contrary to that, if there is no place for another union, you keep on having this violent rivalry and, happening, and it's causing major disruptions in the mining space, and unfortunately, most of the cases it is to the detriment of the actual workers. There's few winners when we do see these uncontrollable violence sort of erupting. So hopefully one can sort of find a midway where you've got a wider range of inclusion and maybe a platform that will be more stable than the one we've seen in the past, and that will be benefit of the industry and all stakeholders.
Cobus, we've got the big announcement by Amplats on the restructuring coming out on Monday next week. That's almost preceding this period of wage negotiations we're talking about. What are your feelings around how the company can restructure accordingly or right-size itself for the realities of the platinum market at this point?
Yeah. Look, it's an extremely tough one, because from a pure economic perspective, I think there's few people that would be in disagreement that there is too much capacity around, So you certainly need to see some of the capacity getting taken out of the market, and ultimately that should lift the capital return of these companies, because then they can spend less capital and they can sort of focus on a higher quality portfolio ultimately. The unfortunate part of it, it's got some, it's got severe complications, as we all know. You take 14,000 people, you add another 8 for every 1 people that's dependence potentially to that person.
And the ramifications for the broader economy.
Sure, and especially terrible. the Rustenburg area, the Western Limb area. There's if you take that amount of people out of the economy, there is a big challenge at hand to manage that. So it needs to be something that's done in a responsible and respectable way. I guess that was from the beginning the intentions from Anglo Platinum, and certainly it seems like the DMR was not totally unhappy with the decision they made. It was maybe just more the way it was brought to the table and the way it was implemented. So maybe we'll see a situation where you're kind of seeing metal getting taken out of the market, but just a more controllable way of job losses.
We've just come out of that interview with Linda Eads, one of the staunch value managers in the industry, obviously ReCM, and they are picking up Anglo Platinum at current levels, having cautioned that we may see the price fall further, but that would be tantamount to a temporary loss of capital. What is your advice on Amplats and perhaps even the other platinum stocks from an investment perspective right now?
Look, I think it is going to be a story of the fittest will survive in the end of the day. There's certainly some of the operators out there and some of the junior operators we've seen. Eastplats last week, I think, was that they pulled their funding on some of their projects, and so there will be a couple of these players that the bus is full. There's just too much platinum on the market, and there's got to be some casualties. I guess that is the starting point. Now, you want to align yourself with a company that is positioned in the cost curve that will enable them, with their balance sheet, to weather the storm, going through a very tough environment. We don't know how long it's going to take, until we really see prices reacting positively again and positive cash flow returns, to the broader part of the industry. But the one thing you got to make sure is that you do align yourself with the better quality. And then secondly, I would say, I prefer the companies which got good volume growth actually in an environment where a lot of the other operators got to cut back on their older, more expensive ounces. We've got some of the likes of Royal Bafokeng Platinum, Northern Platinum, which are bringing new virgin shafts on board. Certainly also in Impala's case in 2 years' time, where they've invested a lot in the Western Limb and hopefully getting better yield from those ounces and being able to operate in a more efficient and effective way. Because I don't think it's going to be a free-for-all sort of environment in the next year or two in the space.
So you're not I'm trying to still pin you down. You're not overly optimistic in the short term about the platinum stocks. In the longer term, will the cycle change? Will what Linda was talking about, there be a significant change in demand and supply, in that we will see those aggressive supply side constraints that we've been tabling for some time?
In the longer term, certainly. As long as platinum or PGM metals remain relevant, as we said, as long as you need autocats and they go into autocats and there's still a sense of jewellery demand out there for the metal, you will see support for the metal. It will just take time, and I guess the difficult part is, will it take 2 years, will it take 3 years, will it take 5 years? And unfortunately, as I mentioned, some companies that from a balance sheet perspective are not strong enough may run themselves into rights issue positions, etc.
But that already leads to the supply side constraints when you've got the smaller companies falling out of the fold, as Linda was alluding to. You want to jump in here? I
just wanted to ask you, Cobus, obviously the way I understand it is that Anglo Plat's moved from being one of the cheapest platinum per ounce producers a decade ago to becoming one of the most expensive, and we've seen in that announcement they want to sell off some of the shafts that they own, some of the mines that they own. How much control do platinum companies have at this point around their cost base, now that we're moving to an industry that's going to have collective bargaining for wages?
Yeah. Look, unfortunately, Anglo Platinum is in a predicament. They've mined a lot of their good quality ore, the higher yielding Merensky ore in the earlier 2000s out, and they sort of left with a majority of their ore is in UG2 that's very dependent on the rhodium price, and where recovery rates are much lower than your Merensky. So ultimately it's a lower paying ore that you're mining. So they've got Mogalakwena, the big open cast mine, which there's potential to expand on, but it will take time and a lot of money, a lot of capital that we will have to invest into that. So in the longer term, yes, if they can transform, and I think that's the intention, to transform their portfolio away from this lower yielding type of ore, more into a consolidated structure where there's better paying, and ore that gives them also more flexibility, and that's the end game that they're looking to go to. But it's not a one-day game, saying that, you're going to see a lot of work need to go into this, and difficult political environment obviously playing out at the moment. They will have to handle that and manage that. Unfortunately, the Rustenburg area is the one where they almost want to reduce their concentration of their portfolio, but it seems it's, from a political perspective, it's very difficult to do.
We've got the Glencore Xstrata merger that's now been effected, and Ivan Glassenberg is now the CEO of the merged entity. What do you expect from that company going forward now? I mean, he very publicly told the market he didn't think much of the previous CEOs that ran the big 6 mining companies. He wants more cost control, more supply control. What's next for the merged Glencore Xstrata?
Yeah, look, the market at this stage is fairly ambitious and confident that they will deliver on that. They talk about synergies between, I guess, $500 million to about $1 billion, I've seen. And certainly there is ways. Glencore's got a very lean cost structure that they will most certainly, I think, impose on Xstrata. There's duplications that will come out. Obviously, synergies from the marketing side, where Glencore is very strong on as well, and maybe some some assets that they will be selling off in time. So from all of that, one can expect them to maybe unlock a lot of value. You know, I guess it's easier said than done in many times. You know, this market, you know, for the best of leaders like the Marius Kloppers, etc., has also made mistakes in terms of capital allocations at certain stages. You know, so we'll have to see. Xstrata doesn't have particularly very good, or their assets is not sort of best in class as a whole. And I'm just worried in an environment that we may head into where we're sitting with slower global growth, that again there's not space for everyone there. You know, it's not a free for all, and that you may see the poorer quality assets actually falling off.
Can't let you go before getting a view on BHP Anglo American.
Yeah, look, I mean, at current levels, one got to say, you know, a lot of the slowdown what we're seeing coming through is priced in. Certainly, are they very cheap, almost like, you know, just close your eyes and buy it? I wouldn't necessarily say that. You know, if you sort of look at the type of growth rates we can realistically expect in the next couple of years.
So expect more downside in your book?
Yeah, but I mean, I think it's limited. You know, I think the shares have taken their haircuts, you know, and they're trading towards levels where one can say a lot of the downside risk has already been priced in. And for a patient investor that still believe in a global industrialization process playing out, it could be a place to own.
Warren, moment of truth. Take Cobus through our strategy here.
This is a new format. We want to get get to the bottom, the real core of some of the decisions you made. Best investment decision, best stock pick you've ever made.
Look, I would say it's maybe buying Northam when it was trading, you know, lower down in the 20 odd rands last year. You know, we got a lot of capital gain out of that in the fund, and that trade worked for us.
And the worst decision you've ever made, Cobus Noel?
Potentially, I guess one of the golds, you know, maybe, you know, managing a resources fund, you know, you're always tempted to invest.
Which gold
to
one
some
in
extent.
particular?
Look, I think Anglo Gold has been the biggest disappointment. You know, although we've been sort of heading to an overweight position in goldfields, Anglo Gold has disappointed massively over the last 4 or 5 years, and it's really hurt the portfolio.